Good morning, ladies and gentlemen, and I'm delighted to have the opportunity to address your conference on the subject of leadership. And I probably have to compliment the leadership of Nuffield, because when Amy McKeever, Joe Burke and John Tyrrell arrive at your front door one Monday afternoon in early August, you do not refuse. You simply say yes, where, when, and get down to the task in hand. So what I would like to cover is give you some perspective on the major context behind the leadership decisions that have driven the development of Origin over the years. We'll briefly review our businesses. We'll give you some colour on our strategic priorities. And I'll share my perspectives on leadership, both personally and from an organisational perspective. And I'll try and bring it all together with some final thoughts. So firstly, some personal background. And I have to confess a conflict, Chairman. I'm an imposter here today because I don't come from a farming family. My family credentials that I'm a native Greystonian from County Wicklow, where I was born, as were my parents, where I was reared and am still living. And Mum and Dad served the Greystones community all their lives. Dad was a plumber by trade, and he also supplemented his income by being a fireman and a fisherman. Mum worked for the local auctioneer. She must have sung at every church wedding and was the duty call officer for the fire service. So you're very much locals, and that's a critically important badge if you're from County Wicklow. I joined IAWS in 1985, and I was probably very, very fortunate to be joining at a time and to get exposed and directly involved in a lot of the developments that took place in IAWS at that time. Married to Niamh, who hails from Kilmacud. We have 4 children at various stages of leaving the nest or not. And for a downtime, I enjoy reading and running. And with the extensive travel that we do, I like to spend as much time as I can with the family, which is largely at our weekends. Okay, just briefly a history, and as many of you will know, Origin is directly descended from the Irish Agricultural Wholesale Society. From having a relatively turbulent time during the 1980s on the back of high interest rates, high inflation, IWS had a questionable net worth of 5 million Irish punts back in 1982. It drove a massive reorganisation, and that led to IWS being publicly listed for access to a financially focused shareholder in 1988. And we developed a rating and profile as industry consolidators, mainly in ag businesses and also consumer foods. But IAWS fundamentally changed tack in 1997 when it went into specialist bakery, because that's where it had identified growth. Now, the reason I'm telling you all of that is that as it developed that roadmap in specialist bakery, the non-bakery businesses were increasingly, I say, at a critical crossroads. The non-bakery businesses had an excellent capacity to support primary food producers. They enjoyed strongly consolidated market positions in Ireland and the UK, and there was also potential for growth. But our challenge as the leadership was they were increasingly being positioned as a cash cow within this big bakery play. And a cash cow in simple terms means you're starved of the lifeblood of any business, which is capital expenditure to grow and develop. So essentially the original businesses, and that's where the name Origin came from, the original businesses were no longer a fit for IAWS. And we're at a real crossroads, and that led us to the decision to separate or ring-fence the original businesses as a wholly owned subsidiary of IAWS in 2006. And the reason for that was to send a very clear statement to our capital stakeholders, our equity providers and our lenders, that we had to do something with these businesses. Either develop them or sell them. And it was as simple as that. So positioning is one thing, and it sounds great, but the reality was the profile of the non-bakery businesses was complex. Our activities were very diverse, ranged from farm inputs to flour milling, to home baking sales and marketing, marine proteins and oils manufacture, and we actually thought for a time we were property developers. We had brownfield sites that were capable of being developed. So it was a bit of a licorice all sorts. And the leadership challenge around all of that was very much to create a sense of purpose. Create a sense of purpose for our employees, our shareholders, our lenders, as to what we were all about. And that's fundamentally down to two things from my perspective. One is articulating the strategic choices about what markets did we want to play in and what were our priorities for capital investment or capital allocation, to quote the actual buzzwords. So we had to start again, basically. We had to build an investment case, and our motivation was pretty straightforward. We wanted to build a sustainable agri-services business. And what does that mean? Because it's quite a hackneyed word. It's very simple, and one of the speakers actually referred to it earlier. Firstly, could we deliver returns on capital that would exceed the cost of providing that capital? Could our businesses deliver a maintainable cash flow to service our debt obligations? Could we develop strong linkages to farm? That was a new thing for the original businesses, because fundamentally we were Irish Agricultural Wholesale Society. Our shareholders were the cooperatives or the co-op PLCs. We didn't interface directly on a farm. And could we find growth? Could we build a model that would be geographically scalable? And could we operate in markets where there was opportunity to consolidate? In other words, the opportunity was in a market that was actually fragmented. And so on that, setting out that roadmap, we managed to persuade the equity markets and IWS to list 25% of these original non-bakery businesses in a vehicle called Origin Enterprises. We convinced bankers to lend us 350 million euros. And with that capital raise in the public markets and that funding, it created the legitimacy again to acquire a wonderful business that we've been looking at for some time, Mastock Arable in the UK. And it was fundamentally strategic because for the first time it gave us direct access to the primary producer, and it strongly complemented our B2B business with a model that was advisory, so really endeavouring to influence primary producers, what happens on farm in terms of technology, in terms of product specification. So phase two of building the investment case recognised complexity. So I talked about the licorice all sorts. So I'm just going to move away here, and hopefully you can still hear me. We had a very good consumer foods business, but the reality was Ireland had just entered the financial crash. We couldn't grow that business. It didn't really fit any longer, given the roadmap we'd set out in a more capital-light, advisory-centric agri-service business model. And we tried for a long time, would other players come in and let us have a consolidation vehicle to bring our Shamrock Foods, our Odlums, our Roma brands together. And with the help of private equity, we created a new vehicle called Valio Foods. Similarly, our marine proteins and oils. We were the largest producer of fish meal and fish oil in the British Isles, mainly for monogastric diets and the salmon farming industry. Great business, but you could never grow it because we were a minnow. We were a minnow in a European context. So we co-invested. We brought in new shareholders, and so took those businesses to 50% interest or below. And that did two important things. One, it clarified a refocused Origin Enterprises, refocused on agri-services. And secondly, it allowed us to strengthen the competitiveness and market positioning of those businesses. So in a way, we were trying to have our cake and eat it, build these businesses, but at the same time provide capital to grow our agri-services business. And phase 3 largely reflects the position that Origin is today, which is one of expanded scale through acquisition, development, and organic growth. And I just highlight two things. 2007, I think timing was very fortuitous, and we can't take any credit for that. I think if we had missed the boat to list the businesses by 2 or 3 months, we mightn't be here talking today. And secondly, the sale of marine proteins and oils, when we disposed of that 50% interest back to the other 50% shareholder, we returned the 100 million capital back to the original equity providers, because the base business was cash generative and we had sufficient capacity to fund our actual growth. So why am I saying all this? I'm saying it for the simple reason that that development over the years legitimized the transitioning to full public ownership. So when we started out in 2007 at 72% of the IWS group, Arista today, that development legitimized them to sell their holding, because effectively the original businesses had become a cash cow. So I think 2 objectives were actually delivered. One is it crystallized good value for IAWS, and it created a vehicle to allow the original businesses, the original core of what IAWS was, to grow and actually develop. And a key question in all that, and so many of you will probably ask, is public ownership the right vehicle for an agri-service business? Are there inherent conflicts? Is the rigor of market communication and always updating the market, the governance structures, worth the effort? And I think the answer is it probably depends. I passionately believe in the case of Origin that it absolutely does. Because firstly, it provides total clarity of mandate, your strategic imperative, and the intentionality of the investor. And if that mandate is clear, you're not constrained by ownership. You'll be given the resources to grow, the capacity to invest, and most importantly, the flexibility to shape your business. But you have to set the expectations in the public markets. You have to be very clear about what the short-term and long-term objectives are for a business, which isn't easily understood in the public markets. Agribusiness, for all we know it intimately, isn't that easily understood in the public markets. But it's an excellent vehicle for investment and capital allocation for the business and for investors who want to put their money to work in businesses that can give long-term returns. Not returns like this, but steady returns on a capital over the years. So that's enough of the history lesson now. So let's give you a brief overview of our businesses. And today, Origin's focus is concentrated on the primary crop production sectors of the food industry. So essentially, we specialize in trying to deliver a customized crop management solution, either through the B2B channel or direct to farm. The only reason we're in the room opposite our customers is to add value in terms of managing supply chain complexity and delivering yield systems, yield knowledge transfer. And I know Roberto has particular views on that. Very important to bring yield knowledge transfer that's practical and relevant to local growing conditions. So our USP or our expertise is we're in the applications game. So the whole role for us is localization of technologies for the local soil types, climatic conditions, soil rotations, etc. And ultimately, you should see Origin as a specialist route to market for the major providers of crop inputs, services, and technologies. That's essentially our business profile today. And a key part of this, and I know this is a slightly complicated slide, so I'll try and go through it. Our role is to connect crop science with practical agronomic application in field. One of the gems of the businesses that we acquired over the years was Dalgety in the UK. And it had developed very straightforward protocols and processes called coordinated growing systems. So having multi-factored and systemized trials put out into the main cropping areas. And that's the core USP here for Origin, conventional agronomy research. We're not fundamental researchers, so we're not seed breeders or we're not coming up with new crop protection actives. But in terms of research, we need access. We need outreach with leading scientific organizations and research institutes. And one of those is our collaborative partnership with University College Dublin, thanks to Professor Jimmy Burke, who is our head of research and knowledge transfer. And what we're doing there is taking data from our thousands of trials over the years, accessing the brain power, the data science and prescriptive data analytics capability of UCD's Insight Centre to produce more prescriptive algorithms or programs that we can support through our digital capability and provide our farmers an enhanced service. So the context is a closed loop. And ultimately, as I said, we are a route to market for that advice and that technology. Joe has talked about Origin, the profile, 46,000 customers today, farm customers across mainly UK in terms of direct farm and a continental Europe, 670 sales force. The direct farm business roughly drives 55% of our operating profit today. That didn't exist back in 2006-07. So there's been pretty significant development there. We're still very much Ireland and UK weighted, and our objective is to grow our presence beyond our established markets. So if we look briefly at our business overview, Origin is the largest agronomy and inputs provider to UK crop growers, vegetable growers, horticultural growers. We're agronomizing something like 1.4 million hectares in the UK today, about a third of the total cropping area. And central to that positioning is the unification, not of 4 agronomy businesses, but arguably 34. Because all of these businesses were local, really well-established, hugely respected local agronomy businesses that were under the various umbrellas. And we took the step in 2012 to really unify them. Why? So we could put investment behind them, so we could improve the research capability to drive better intelligence and support to our agronomists to do their job on farm, to enhance the technical support overall. So I think, and that has taken time to bed down, because again, you're giving your business a sense of purpose where you want to actually take them. And these things take time. And I'm really proud of what the management team have actually done in that. They've done a fantastic job to create that vehicle. So as the largest agronomy service provider, roughly 260 agronomists in that business. 2015 probably saw our significant expansion into continental Europe. First time entry into Romania through acquisition. We expanded our business in Poland through acquisition, following our original position in 2008. And we had some big, reasonably significant organic growth in Ukraine. So servicing 17,000 customers across those 3 geographies today. And I think that acquisition development in 2015 was significant in that it was funded by recycling the proceeds from the sale of Valio Foods that we put together in 2010. And that was important because 2 things. One, it further clarified Origin's business profile, and we made those investments without recourse to additional debt. So just to give you some perspective on why we find these geographies attractive, and I've just used UK as an example here. So we we think that these countries do provide very good market opportunity. Firstly, in terms of their relevance, in terms of the size of the cropping area. If you take the UK today, 4.7 million hectares, under 11 million hectares in Poland, 8.3 in Romania, 21 million in Ukraine. That's why we want to play in these geographies, and particularly their relevance as a material grain and oilseeds producer. What I think is more interesting is, if you look at the average farm size, it can be very, very misleading, because ultimately what we're looking at is the rate of agricultural area that's farmed intensively. In other words, generally as a proxy, comprised of farm units over 50 hectares. And if you take Romania, 53% of the agricultural area is probably controlled by 30,000 farmers. Less than 1% of the 3.9 million. And it's those farm units who are consolidating and growing, and we're looking to partner with. If you take Poland, average is 10 hectares. But the reality is probably 2% of that 1.4 million is controlling 30% of the agricultural area in excess of 50 hectares. And again, we're endeavouring to support those. Ukraine is in a different league altogether. Only 43,000 registered farms. Former collective agricultural system, the land given back to the population, and farm management companies, and both internationally and domestically, renting that land. Whether that's a sustainable position long term, I'm not so sure. And we may see some fragmentation in the actual Ukrainian land base. But when you look at the yield potential here of where they're at, again, the averages give very misleading figures, because that element within the 50 hectares are delivering very, very significant performance on a field by a field basis. So that's why we're playing. We have to risk manage it, we have to manage it, but it's an excellent geography to get direct access to farm. Fertilizer blending, just some of our B2B business. I'm delighted to see Tony McIver here, my colleague. Origin's position as a leading fertilizer blender, largely Ireland and UK, also in continental Europe, has been built up slowly over a 40-year period. Different drivers in this business. Very much strategically located portside facilities, because that allows for the efficient handling of raw materials. Continuing investment, capital investment to ensure good, consistent plants, formulation facilities to drive quality, and most importantly, to have flexible supply chain into different distribution systems. And finally, continual technical product development. Very important driver of this business, particularly to deliver agronomized nutrition. Our feed ingredients business, I thought this is another business which is interesting and will be familiar to you. We partner with W&R Barnett. We've partnered with them since 1990. The relationship goes back much longer in history for R&H Hall. And I think this is a business whose relevance is really understated here. It's a logistics business. It's the largest provider of the macro raw materials for the animal feed manufacturing industry, compounding industry in Ireland. And it's an infrastructure business. Its whole role is to have the broad spread of deep port access where we can competitively source feed raw materials and cater for seasonal demand. And it's a volume business. It's about maximizing asset utilization. But that fails to describe what R&H Hall is about. Given our position as a major exporter of food, it's a key role in competitively sourcing feed raw materials, and more importantly, as sourcing safe raw materials. And there's a huge risk profile in managing all that. And that's a role that's often not understood so well with R&H Hall. So strategic priorities. Dr. Ivor Kenny, who was, he formerly headed the Irish Management Institute, and he had a fabulous saying that a number of you really resonated with me. Looking beyond our present reality to make tomorrow's battles winnable. And that's very, very difficult as managers of your business or for myself and my colleagues, because you're always informed by today's events. And so we have to really look beyond where we are in terms of our markets and our positioning. So I just put down 4 key priorities here for Origin as we go forward. In terms of scale, it's pretty logical in terms of where we allocate capital to grow our business. Very much around extending our service footprint in existing and newer geographies, particularly where primary crop production is efficient and competitive. That may be agronomy businesses, it may be product-based businesses. So they must be cash generative and deliver all of those metrics that I have discussed before. UK farming is a big issue. Not an issue from the perspective of the industry, it's highly efficient, but we expect that UK farm structures and business models are going to adjust in a post-Brexit environment. And you're likely to see a transitioning to greater competitiveness, particularly in relation to cereal production, probably more quickly than some of the other enterprises. And agricultural land consolidated on larger farm units. And we have to respond to that, because we see there'll be a greater reliance on technology and innovation to drive productivity in that environment if the support structures are not where they are today, or they accelerate down more quickly. And that's about delivering return on investment to our customers, maximising gross margin, and it will require a readjustment within the industry, within the business. And we have to be prepared for that. That's our day job. We'll continue to prioritise investments in digital technology. And there's an awful lot being said about digital technology, and it can be sometimes a bit of a sweet chop. But our perspective is we want to be able to deliver more real-time and customised solutions field by field for our customers. And we're endeavouring to build the capability. We're not pioneers in digital. We want to bring the capability in the business to work with our actual routes to market. We're a relatively small public company, and because of our expansion, we have to grow up in terms of how our people and organisation develops over the next 3 to 5 years. We have to devolve capability. We've expanded into continental Europe. Hopefully we'll expand elsewhere. So we need to create new and devolve capability that has more autonomy for running the business and has greater accountability for driving performance. And there's enormous effort in doing all that, and I will touch on that in the next couple of slides. So there are 4 key priorities for Origin as it maps out its business plans over the next 5 years. So leadership, the difficult question. What I think we need to do first is really look at leadership, firstly through the lens of our business, our markets and cultural complexities. Because it's very easy to talk about leadership in theory, but we need to know what are we dealing with within Origin's businesses. And firstly, we operate in very diverse geographical markets. They're very different in terms of their routes to market, the competitive dynamic, and culturally. Our agronomist and sales teams identify most closely with their customers, and we need to preserve the integrity of that relationship. So they have a much closer relationship than necessarily the actual corporate, as it would be called. So our challenge is one of balance. How do we align our business to the objectives of the public company? How do we create building blocks for future growth? Because as a public company, we have to grow sustainably. And I think most importantly, how do we sustain the enormous work commitment and loyalty to the business? Because that's the one thing that has struck me in all our markets, huge people commitment, dealing with the vagaries of the season, supporting their farm customers. It's enormous. And you have to be very careful you don't bureaucratize that culture from the top. So what does that say? From our perspective, and this may sound a little technical, what we want to do is balance the requirements of the PLC for scale, for the strategic imperative, for the performance, with that local decision making and connection with the customer. So we operate what we call a hybrid structure, which is decentralized operating divisions, very, very important, with centralized functions. So board sets strategy, and the business units have full autonomy for driving the bottom line. Very important. You can't weigh in on that. You have to give the autonomy and the responsibility, and that's a sea change as you actually grow. So it's managing growth. How do you manage that? You have to create the right structure itself. And very much the operational control standards and delegated authorities from the centre go into the business to foster alignment with the actual group itself. So what does that mean for leadership? It can't be top down. You can't behave as the boss, because ultimately you're not involved in the detail from my perspective or my colleagues within Origin here. So you cannot confuse and create ambiguity within the management teams. So the most effective leadership is what we call an influencing leadership, whose role is really to motivate and empower highly experienced and knowledgeable management teams, and hopefully align them to the objectives of the centre. So definitely communicating total clarity of purpose every day, very, very important, and clear responsibilities. But you can't go and do the job. They have to have bottom line accountability. And I note in the last one, your body language really does matter in this job. My burdens or my colleagues' burdens are not the management team's burdens in Romania or Poland. So how you show up, you have to be incredibly supportive of the team. And if you have issues, invariably, they are not their issues. So what have I learned? John asked me to put this down on paper. I was a little reluctant, but anyway, here goes. I suppose because I've been involved in the business for so many years, the tendency to weigh in and be hands-on is very dangerous. There's a lot of comfort getting involved in the detail, and you lose strategic focus. So I have to slap myself now and again to come out of the detail and keep the bigger picture, and it isn't easy. I haven't addressed conflicts quickly. And it's a very important point. If there are conflicts of a personal nature or whatever, you really got to address them quickly. Because what experience has taught me is that those who are most impacted are those who are most loyal and committed to the actual business itself. I'd say flag change early, very important. Articulate the rationale over and over and over again, and people will actually follow you. But you have to flag it early. You have to get ahead of the actual message itself. I passionately advocate succession planning. I think it's very important. I've seen experiences over the years when things go wrong, either within the business or at the top of the organization, the management infrastructure isn't there. So have succession planning. It's very positive for the business, for your teams. It creates momentum, and people feel valued. It can be a lonely job at times because you can't share everything. So have a confidant, someone who'll put the mirror up to you, and that won't tell you what you want to hear. In this job, you can start believing your own PR a bit too much. So you really do need to create a culture, not of fear. I don't mean it that way, but certainly that people are not afraid to tell you what they really think. And finally, manage stress. It is a stressful job. There's a lot of travel. You're managing demands of the public market. You're managing demands of the business. So stay healthy. Have a reasonably good balance in your life outside. So finally, ladies and gentlemen, I was trying to think how could I just summarize all of that in a one slide. And ultimately, it's about creating a roadmap. And I'd see it as an exercise in understanding And it's only about 3 or 4 key points. Take time to understand the conflicting demands on your business. We have to understand the polarized choices that farmers face every day. We got to always look at where are we relevant to farmers, or else we have no business interfacing. We've very complex routes to market. They're very different in each geography, and fundamentally we got to understand risk. Every country has a different risk profile, different dynamics, different setup, and where we should invest for a growth. Because that's a major statement as to where the strategy is actually going. Thank you very much. So I'll be delighted to take any questions.
Thanks very much, Tom, for that overview of the business and of your experiences as well too. I think we'll all agree that there's an awful lot that we can learn from your story there from origin, the success that you've had over the last 20 years, in particular in growing the business. John Turrell, our executive, he had a phone call in advance of the conference asking, what's Tom O'Mahony going to be speaking about? Is there any chance you can forward me on his presentation? And John was asking him, all right, would you like to come? Are you involved in agriculture yourself? I am, but I'll tell you, I actually invested a good few quid in Origin a few years ago, and it did very well for me. I bought them around a euro, and they're at €7 now, so he was really interested to see, how things were going. Definitely a lot of commonalities there from even some of the speakers that we heard about this morning, from succession and all the way through as well too, around knowledge transfer and knowledge sharing within your business. Maybe one of the areas maybe first that we might concentrate on before coming back onto the leadership maybe, and we'll take some questions as well too from the floor, but the first one around maybe the UK market. It's a huge part of your business. Yeah. You emphasised it there. A third of the UK cropping area is basically under Origin's advice or under your control to some extent. And you touched on it in a little bit of detail, but maybe to flesh it out a little bit more if you could, Tom, about how do you see it planning out from your perspective? It's obviously a market that you want to continue to prioritise and have a big focus on. How are your customers, I suppose, responding at the moment, or what are the early indications there?
Thanks, Joe. Well, firstly, I'd say the UK, and maybe the chairman of Nuffield, you might agree or disagree. In our sector, which is primarily cereals, there is broad optimism. Now, maybe that's because there was a reasonably good season. I was really struck by the support of the farming base to leave the EU. And there are a number of dimensions to that, but certainly within UK agriculture, the self-sufficiency culture is enormous. They see, and it emanates from the UK Treasury, that the subsidy and support as is currently configured is a blunt instrument. And many of our customers are thinking, how are we going to manage through a structural change in that support mechanism when it happens at whatever stage? And many of them see the route through that to managing the fixed cost base. Okay, so are we going to have pooling arrangements? The cereal sector has consolidated in a previous iterations where the sector has come under pressure pretty quickly. I think there'll be enormous political pressure to redirect supports to the smaller scale enterprises on marginal land, sheep sector, etc., which is probably particularly exposed to a UK EU trade agreement at some future date. There will be disruption. I don't think there's any doubt about it. There will be bumps in the road. We will see consolidation. And as in everything, that presents us with challenges and opportunities. I think we have an infrastructure and a toolbox that's, without using a hackneyed word, that's very well capable of supporting growers as they expand. And a lot of the investments we're making today is to prepare us for that actual event. Will the overall cropping area reduce? It may. The big unknown is where structurally will sterling be? Because one of the biggest boons for UK cereal production in 2017 has been weak sterling. while the underlying output price has been weak in dollar or a euro terms, crop margins at farm level have increased, and they haven't seen the input price inflation that we've probably seen elsewhere. Now that's cold comfort. Ultimately, reorganisation, in our view, and the view of our investors is quite interesting, particularly in the UK. You rarely get a question about Brexit. You rarely get a question. And if you try and debate it, can we stop talking about it? Because none of us knows what it's going to be. But ultimately, they're supportive because they see disruption as being positive. There will be bumps, as I've said, Joe, and we have to be prepared for it. I think how we geographically balance the business too is going to be important. If we got a great opportunity in the UK, it would need to make seriously compelling sense, a material investment in terms of adding value, or do you look elsewhere? I think we have to rebalance. Can we double the size of our continental European business? That will take time, but ultimately we're a reasonably big player, but it's a very, very fragmented market. We need to allocate more capital there to build up that business.
Thanks very much, Tom. A very good overview, all right, of where your company, I suppose, sees the future in terms of the UK market. It's a sustainable market, it's a huge market, and you continue to invest in that market. Maybe just to take a question, the first question, if we can, Ger.
Chairman, thank you. Tom, thanks for your presentation.
Ger
Bergen, IFA, and
hello, Ger.
Nuffield Scholar as well for my sins. My question is around the domestic tillage industry here and grain industry. It's been under serious pressure for the last 4 or 5 years on price side, input side. And I was interested in the R&H all part of your presentation, and let's be straight about it. Some farmers would see that as direct competition and, in achieving a price here.
Yeah.
We are a deficit market. We understand that with a large livestock and dairy sector. So I was just interested in your views on what the Irish tillage and grain sector could do to replace or achieve more market share at a higher price, particularly around the issues around traceability and all that are coming, closed loops and all that in food production, what we could do, if we could do anything in that scenario to try and rebuild the grain sector here, and the quality end of it, the traceability end of it. Very interested in your views. The second question is on the other side, on the input side, and again, wearing an IFA hat, we would see the fertilizer industry across Europe as basically a cartel, and we might as well be straight about it, okay? And that there's an artificial higher price being demanded of EU and Irish farmers as a consequence. There's no functioning futures market at farm level or any of that kind of thing. We see prices being hiked at the moment now in advance of the new season, and we're on a bit of a campaign to try and do something about duties and tariffs at EU level to get that changed. And I'd be just very interested in your views on how we can get more competitive inputs, particularly in fertilizer, into the Irish farm system. Thank you.
Sure. Thanks, Ger. Look, on the tillage sector, I think the really encouraging thing about tillage is some of the efficiencies and yields we actually get. I think the one immediate thing is how to manage price exposures, because it is a real issue. And there are no right or wrong answers, Ger. I mean, we could advise something as an actual business. I totally take the point about having greater traceability, having more high value-added offer going into consumers, and that's part of the traction we've seen in the UK, where you have very clear consumer end markets for crop growers. So in our business, we would agronomize a malting barley in a particular system for Budweiser. It gives you, because we understand the actual constituents that are required for a brewing. It's taken a long time, but it helps differentiate those growers, those actual contract growers. So I think a bit of effort in that would set out an actual roadmap. Can we find very specific markets, either niche markets or value-add markets? And you have to put the steps and system in place to get the connection and trust of those customers. It's taken us a long time. The second element is I think we got to know our cost of production. I'm not saying we don't as an actual industry. And the price risk that we all take, either in our business or in your business, is enormous. So we have to have better mechanics for managing that actual risk itself. And my advice would be cover out exposures a little bit often. It may not be the actual top prices. We don't know where we will be tomorrow. And I think to have a sustainable business, notwithstanding the enormous weather challenges we have, I think focusing on the price risk management is going to be a key thing in the short term across any tillage enterprise itself. And secondly then, it does take effort, but the returns are worth it to find those niche value add markets. On fertilizer, yeah, I mean, what can I say, Ger? Fertilizer is a globally traded industry. We are de facto price takers. We take enormous risk in building up stocks for the main application period. I think the duty issue is a real issue, but I think a bigger issue is the volatility, the actual concentration that we are seeing in urea production, as an example, and that moves so many of the other markets. And what struck me this year, I can't tell you where the prices are going. Like, prices are starting to firm. Are they going to stay at that level? I don't know. And I've lost confidence in our actual ability to actually predict that. And I think that is ultimately the issue here, is the overall consolidation of capacity. We're going to see more and more volatility in fertilizer pricing. I think as players, we're reasonably efficient. I would hope we are in sourcing raw materials, in delivering good actual supply chains themselves. But the application period doesn't suit the working capital investment within the business. There's an enormous peak and a trough within the business itself, and I don't see any easy answer to the volatility. I think the duty thing perhaps will be answered in a time, but the volatility is the bigger issue. Certainly from our perspective, Ger, from what we see.
Thanks, Tom. Question from the back, Karina.
Hi, Tom. Thanks.
Hi, Karina. How are you doing?
Fellow Wicklow person, good to see you.
Yeah.
Just, Tom, a quick question on, I suppose, traditionally investment in R&D by Irish agri-businesses tends to be very low.
Yeah.
And Origin, you seem to have taken a different approach to that. Investment in research is risky because you don't know what you're going to get out on the far end of that.
Yeah.
So just interested in your thoughts on investment in R&D, how you make that decisions, what you decide to invest in, and so on.
Yeah. Well, firstly, Karina, as we said earlier, we're in the applications game and service, and that's the only reason we believe we can sustain a relationship on farm. So our agronomists, our sales team, have to be very confident in the messaging, and that's actually the beauty of the relationship, identifying more closely with the farmer from our salespeople. Because you have to deliver impartial research. No agronomist will go on farm and recommend something which he knows will not work for his customer. We spend between 10 to 15 million euros every year on applied research. So that's either replicated trials, and that's separate from our investments in the UCD partnership. And only by doing that can we sustain those customer relationships. So we think it's key. Partnerships are fundamental as well. We cannot attempt to get into big data and try and reinvent the wheel ourselves or become a seed breeder. We have to localize. That's the only reason we can sustain a farm relationship. And we have to be prepared to follow our money. So UCD is a 17 million investment, basically in intellectual capacity in UCD that we could never hope to replicate. And if we didn't do that, I don't think we would have a sustainable business. We couldn't continue to agronomize 1.4 million hectares. I don't think we could continue to service 5 million hectares in Ukraine, or the 3 million hectares that we do in Poland today. So that's a very necessary investment. It leads the returns, absolutely leads the returns, and you have to make it commercial and compelling and very, very transparent. So we leave the fundamental longer-term research to other stakeholders, but partner with them to make it applicable to today and the particular growing season. It's absolutely essential, Karina.
Thanks, Tom. John, I'll take that question down at the back there.
Tom, Jim McCarthy.
Hello, Jim.
Nuffield scholar and Comfort Romania customer.
Yes. Yeah, you haven't said when you were a Nuffield scholar now, or when you...
1996.
Okay.
I'm from the Bronze Age of Nuffield. There are a lot of young Nuffields here who have huge ability.
Yes.
And to realise that ability, they will have to go outside Ireland, as you have done, because it's such a small place. And, you know, not only work in mainland Europe, do you realise how insular and small Ireland is. You've been incredibly successful at building businesses in very diverse places, where they are culturally different and very challenging business-wise. Yeah. And it would be great if you talk us through the process you go through of assessing the market, assessing the risk, and assessing the reward.
Sure.
I think you have an awful lot of experience in doing that. And just for the people here, at the time these guys entered into Romania, the likes of Cargill were abandoning selling inputs in the Balkans. Cargill were leaving, and these guys have come in and built a very successful business. So it would be great if you take us through the process.
Thanks, Jim. Well, firstly, our role is not to come in and plant the origin flag and think we can be arrogant enough to be all things to all men in a market. And I'm not suggesting Cargill did that, but it isn't a one-size-fits-all. So the first thing you have to do is you have to identify businesses with a very loyal customer franchise, a very loyal farming franchise, and that courtship it's essentially an acquisition roadmap. That courtship can take 2 years, or longer sometimes, because ultimately it's building trust. You want to be able to say to the owner of that business, be it a very good local distribution business, we have 2 businesses in Romania, we want you to bring your business into origin. This is a very good home for you. We can support you with investment, and our role is to make you more effective and professionalize the back end with respect to delivering for your farmers. And that is a bond. It isn't acquiring a consumer foods or a B2B business, which is quite transactional. So there's a cultural bond you have to create day one, and that can cause conflicts, because the centre might want to roll in the prescriptive administrative guidelines and controls day one. You have to bring people on an actual journey here, because what they may not have in structure, they make up in spades in terms of the quality of that farm relationship. So Romanian businesses are run by Romanians, Polish businesses are run by Poles, Ukraine run by Ukrainians. Very, very important. Okay. So the second thing you have to get right, or first thing after that, is the rigor around cash flow and cash collection. Because in these markets, it tends to be very long harvest credit, unlike what we would have in the UK market, for example. So bringing a sensible rigor, having a crop marketing capacity in the business to exchange the input payable for the actual grain. Very, very important that you actually do that day one. And then training and development, to start to articulate a roadmap where we build a structure for the people within the business. because they've deep knowledge. Like these are knowledge businesses. We could never replicate the understanding of the farm relationships, but you want to create a roadmap for them. So in our businesses, for example, we have continental Europe. We likely have a head of continental Europe. When I talked about succession planning, that is creating upward mobility for people in the business to run the individual businesses themselves. Very, very important, and that aligns you to the group. So it's building the trust. Sending our own people out is very important too. And we find that harder, Jim. Like the Kerry way, to have one of your own out in a business in South America or Brazil, we find that harder and harder. And we have to work more rigorously at that. It isn't the instrumental package that is the issue. It's partly what I value in terms of my lifestyle. So we have to really work very hard at how do we orientate a HR package for our people to move them into the business and just create that greater stickiness. So in a summary, build and train and develop our in-country people. Build structure so as they can really identify with the corporate. That's very, very important. And you have to be patient. You may not have the optimal structure day one, for the simple reason that this individual here is superb at relationships, and that's the most important thing. They may not have the capacity to manage. You will train and develop them to actually do that. It may not work out in the end. So that point about relaxed patience, it's key in these geographies, and never have a one-size-fits-all. Never. I mean, we merged two businesses in Poland for the right reasons, and we knew we were taking risk there, because A, they were competitors. B, one had a very different philosophical approach to the market, and they didn't like it and they rebelled, and some of them would leave. But you know the risks you're actually taking. And ultimately, the message is we want to bring the business to a better place. So it takes a minimum of 2 years to get the mindset change, and possibly longer. So relax patience, preserve the integrity of the local structure, because that's what the business is about, and gradually align them to the group. If that explains, Jim.
Thanks, Tom. That was really interesting, Ori, getting an insight into the strategic and the structural management in the different markets and the challenges there, and trying to develop the business in that way. Another question here.
Hi there. Since I have the microphone, I'm going to use it. Andrew Gow is my name, from Limerick. Agronomy and agronomists is something we associate with, or I certainly do, with tillage, but the largest, and maybe vegetable growing and so on, but the largest crop grown in Ireland is grass.
Yeah.
Personally, I feel there is actually a deficit in the advice on the agronomy for growing grass and looking into the future. And there is a lot of advice there, but I think probably when we talk about tillage, and we've seen precision agriculture in tillage in particular, would you concur with my view that there is a deficit there in advice from agronomists for grassland production and for developing it into the future?
I'm probably more competent to talk about the UK, Andrew, and certainly I would agree with that. It is the case.
Fertilizer efficiencies in particular.
Absolutely, because fertilizer is predominantly a commodity. I think Origin has had good success in bringing out technical development, like selenium, like doing primary trace elements through grassland application, has been really successful. And our biggest success, has been in Ireland. So we have struggled to get the same pace in the UK. I think we need to put more management effort into it. And it's more the management challenge. It's changing the culture within the business to move away from what's more essentially a commodity mindset to specialist nutrition, joining up the commercial, the technical, and the actual selling effort itself. So I absolutely agree.
Okay, we have another question down here. Brian.
Thanks, Joe.
Hello,
Tom,
Brian.
thanks very much for the presentation there. It was very interesting, getting insight into Origin, its background, its creation, and where it is today. I'm a dairy farmer from Kildare, 2015 scholar, and I suppose you mentioned consolidation a couple of times, and definitely as part of my travels, it was a theme, whether consolidation in terms of input providers, agri-chemical companies, and farming. And in particular farming, I thought consolidation was driven mostly by skills shortage and the average age of farmers. So consolidation was, rather than a choice, it was just, that's the trend. My worry is that consolidation can be viewed by some as being a bad thing, and can be used maybe as, as part of this negative PR sometimes we're having to deal with, that because something is big, it is inherently bad. Would you view that as a threat? Or would you view it as a threat to your business? And if you would, how do you deal with it, or should you be dealing with it? Thank you.
I don't view it as a threat at all, and I don't believe it is bad in any case. What we're seeing is the consolidation drives that we see in, if I park Romania, because there were different political drives there, but certainly Poland and Romania, that's been driven by as much as driving land values for the owners. Because if I can drive productivity gains and I can bring more efficiencies themselves, I can drive land values. And that's inherently healthy. There isn't anything wrong with that. I mean, you're coming from a subsistence environment here, something that's becoming professionalized. I think consolidation at the outer ends of the value chain, be it input providers or input manufacturers or crop originators, doesn't invalidate in any sense the local relationship. I think that's from our perspective, we don't worry so much about the actual consolidation or the Bayer Monsantos you've seen, or the actual Dow DuPonts, because that's for a different reason. And ultimately, our relevance in terms of managing those local relationships, be it 5,000 customers, managing the cash flow challenges, managing the grower through a good season or an actual bad season, will always be relevant. And we would encourage them to actually grow and consolidate, because they will have a more sustainable business. So I definitely don't see it as an actual threat to family farming in any sense.
Thanks, Brian. Maybe just one question as well, too, with regard to maybe your own personal leadership kind of journey, Tom. I suppose, back to 1997, obviously a huge period of change for you within the organisation. Did you find at that time that, under the restrictions maybe of the public ownership as well, too, and the structures that were there in making the decisions as well too that Brian asked about refocusing, about specialising in the enterprises as well too that you focused on, was that made more difficult as a result of the ownership structure maybe, and some of the responsibilities and answering back to your shareholders?
Absolutely, I think, Joe, certainly in the initial phases it was difficult. It was difficult to justify capital investment in the businesses. And I'm talking about significant capital investment, not the routine CapEx. And in fairness to IWS, they always maintained that routine CapEx spend. But because of the opportunities we saw, we couldn't get access. And to be honest, Joe, it was the public shareholder who probably called time. Because every time you went to the big institutional investors and you had 50 lovely glossy pages on bakery and consumer foods, and the last page was agribusiness, the meeting just died a death. And we probably didn't actually present it the right way, because these fabulous businesses, the returns on capital were superb. While the other business was growing, it wasn't delivering the same returns on capital as the actual agribusiness. So I think the impetus that drove us to make those decisions was driven by the institutional market, because from their perspective, they were investing in a bakery consolidation play. They were not investing. So we to recreate, and it was harder than that to a certain extent, in that we got everything that wasn't bakery. So we grew up in the ag business. That's what we wanted to develop, but we got all the other stuff with it. And when we launched Origin, we gave a 200 million uplift in the value of our development property, or so-called in Cork Docklands. A year later, we had to write it back down. So that wasn't an auspicious start for Origin. And I think that is a strength of a public company. If you're very clear, investors will back you, and you get the shareholders you actually deserve at the end of the day. So many of our shareholders, they're in it not for the quarterly performance and the impacts of weather and short-term pricing. They're in it for the long-term returns. And that's what drives the investment and the strategy and the market where you actually go. But it was definitely difficult in the initial phases, yeah.
Thanks, Tom. I think we can all take a lot from that as well, too, about our own industry, because, you know, during the downturn, we certainly heard a lot of positive things about the agri-food sector in general. Some of that is starting to be diluted again with other sectors, you know, rising to prominence. But I think, as you gave us very clearly in your example, telling the good story, telling about what you're about and your priorities and your suppliers, and, you know, giving them, you know, really the bare bones of your focus and your priorities. I think, you know, being honest and you know, putting out those very positive messages that you have.
Thank you, Joe.
Any other question? Yeah, Tim.
Thanks, Chairman. Tim O'Leary, Nuffield Scholar.
Tim.
I'm younger than Jim McCarthy. Could just on some of the developments in the marketplace recently on things like glyphosate.
Yeah.
We are hearing this week now about endocrine disruptors, and politicians are starting to make a run on that.
Yeah.
Recently at a Dairy Goal meeting, we had our chief executive talking about demands for GM-free milk, not just that we don't have cloned cows, but that our feed has no GM whatsoever contained in it. And I'm just wondering, what's the impact of that going to be? How serious is this as an issue? And from a background of, I can remember when we had beef hormones removed from the marketplace in Europe, and I remember the minister at the time promising us that we were going to have a premium product, that this was going to be an appealing product all over the world, and we know exactly what happened. That didn't work, and it didn't, you know. We've seen recently Origin Green, ESTAS, the dairy assurance schemes, and they have become commoditized, very rapidly commoditized after being a drive for a premium slot. Now it's a demand. And, you know, this is all coming around with far greater public involvement, and this new idea of a license to farm from the public, regardless of whether regulation works or not. We now have to appeal to somebody else. How do you see all this playing out, Tom? Or are we in a real state of flux here, or how do you see this playing out?
I think it's very, very difficult. I mean, the glyphosate issue, I would hope sanity will prevail. We'd be moderately confident it will. GM is a real issue, because fundamentally it is a consumer issue in the minds of the consumer, and I don't know there's the political will there in a Europe to front up on some of these issues. And I think Europe as an agricultural base risks becoming less and less competitive if we can't use these traits. Like, the science is unambiguous. From a global food theme, the science is unambiguous, and I'm not sure what the actual answers are here. I think until the consumer is convinced of the status of GM, I'm not sure we're going to make rapid progress on it. Like, GM is a reality, whether we like it or not. I maybe shouldn't be saying that, but it is, and it's it is difficult. It is difficult because unless the consumer brings us there, we're going to have these inherent conflicts.
Thanks, Tim. Question at the back.
Campbell Tweed, Nuffield Scholar from County Antrim.
Hello.
How, following on from what you're saying there, how do you think the industry can best answer misinformation and what's basically fake news being exploited by people who have no interest in putting truth in front of people?
I think simple political will. I think absolutely political will, and there needs to be a sustained communication so consumers can become convinced. I genuinely don't believe there is any other way, because until the consumer, and maybe that's a fanciful objective at the end of the day, but until the consumer accepts the GM technologies for what they are, we are going to struggle. And hopefully sanity will prevail when we see ourselves being increasingly locked out of these technologies.
One question at the back, Anne.
Thanks, Tom. Anne Randalls from Ornua. I'm not a Nuffield scholar, but I do have a sort of passing interest from a consumer perspective.
Hello, Anne.
On the GM debate, and it is a very, very tricky one. There's no doubt about that. I think from our perspective, I don't think it is a food safety issue that the consumers seem to be responding to. I think that it's a much more nuanced and trickier issue to deal with. And I think from our perspective, this is what the consumer is looking for. And so my question to you is that, I mean, is that perception, or is that being accepted at the farm level as well, in terms of decisions at farm level and in crop planting and all the rest of it? It does seem to be an intransigent issue, certainly from the European consumer. We have been for maybe 10 years now expecting that to move on, and for, as you say, the knowledge and the scientific facts to take hold, but they're not taking hold from a consumer perspective, particularly here in Europe. So if that is the case, how, from a industry perspective, how do we actually provide what the consumer wants? Thank you.
Well, thank you. And if you take H Hall as an example, to provide traceability, for example, on non-GMO soya, requires an enormous effort. Absolutely requires an enormous effort. And the reality is, you have exporting powerhouses such as North America and South America who are in the biotech industry. I mean, I think Europe imports something like 40 million tons of soya for animal feed. The whole traceability regime around that, and not to have GMO traits is practically impossible. I mean, certainly it's becoming increasingly difficult. I think Europe is at a disadvantage. I don't have any answers to it. I accept your point. The consumer's perception is the reality, but I'm not sure at the rate of developments in biotech that we can continue to operate the way we are.
Yeah, just coming back on that, and I totally understand that. But some of the words that you used are emotive from the consumer, in terms of the powerhouses from the US and all the rest of it. And I think that is probably one of the driving reasons why we have this reaction. From an Ornua perspective, and certainly in terms of the Kerrigo brand, what we're seeing is that we are actually at a disadvantage on a competitive level, because our competitors can actually produce GM-free dairy products, and that's the problem. So, we are in Ireland, but we are heavily dependent on imports, while in continental Europe, our competitors can actually produce what the consumer is looking for. So it is possible to meet the consumer demand. Unfortunately, despite our green image and our orange and green and our island status, we're actually at a disadvantage in this context, and that's where the conundrum really is for the industry. But it's a very, very serious point.
It is,
particularly in terms of the marketplace and consumer. Thank you.
Thank you.
Thanks, Anne. Well made point there in relation to the GM issue, which is one that certainly we all need to continue to keep an eye on. We just have time for one last question, so it's actually a horticulturist from an organic background. Klaus is going to ask you a question now, Tom.
Yeah, current Nuffield student Klaus Leitenberg. Just wonder, could you see that threat of GM feed as an opportunity to build up an industry in Ireland or the UK of alternative sources of protein, like beans or lupins, that would also help maybe in crop rotation and soil fertility aspects for the future?
Oh, definitely. Absolutely. And particularly sorry, I didn't see it. Yeah, absolutely, and many of our growers have that actual mindset because they're very close to the consumer. Yeah, and it is an area we're becoming increasingly involved in.
Excellent. Thanks very much, Tom. You give us an excellent presentation and a really interesting discussion as well too afterwards. You're a mine of information as well as the leadership as well too that you've brought to Origin and the success that you've had in recent years. So what we'll do before breaking for lunch, a round of applause, please, for our keynote speaker, for Tom.